Hey guys, welcome back to another MGI investing tutorial. This is Barrett, and today we're going to be going back and looking at some of the stock market lingo I use in many of my stock analysis videos. Before we start the video today, if you find any of the information to be useful, please like the video and comment what other concepts or terms you want me to cover in the future. So with that being said, let's jump right into it. So the first term we're going to be covering today is a gap. And all a gap is basically a sharp movement in one direction or the other. And it normally happens after hours. So here in front of me, I have Apple stock picked out for us. And I turned off after hour trading so you can see it easier. And the first thing you're going to notice is all of these places where you don't see any candles. And this is what I'm talking about as being a gap. So with after hours turned off, you can easily distinguish where a gap is and where a gap is not. Another thing that we're going to be looking at today is how we can use these gaps to gauge, especially in my technical analysis videos, why it's important of when a gap could be useful as a possible gap reversal, or a gap could be useful as knowing when a level of support or resistance was broken using the gap, and how that could lead to what we think in the future is going to happen to a certain stock. So let's jump right into it. So there's two kind of gaps that we're going to be talking about in today's video, and the first one being a runaway gap. And by looking at this chart in front of us, you guys can see we're in a very bearish pattern. Now, everything in the stock market was in a bearish pattern a couple of weeks ago, such as Apple. But looking specifically here at Apple, we can notice that a runaway gap, which is this one denoted by a red eclipse, is basically a gap that is going in the same direction of the already established trend. The other kind is a breakout gap, and that's denoted by this green eclipse right here. And basically, a breakout gap is going in the opposite direction of the established trend, possibly allowing for a reversal of whatever trend that we're already currently in. So notice, very bearish pattern, a gap going in the same direction, confirmation for swing traders that this could be going in the exact same direction that we were already previously established in. Then we have a green, which the color does not denote anything specifically, but we have a breakout gap. This does denote that we're going to be going in a possible reversal of whatever trend that we were just currently in. And you guys can notice we have created that trend line now, and we are in an opposite reversal from what we were doing previously, now bullish. This yellow gap that I've created right here an eclipse for, the color again does not mean anything particularly, but what's important is this is what I normally am looking for in a stock analysis video. And what this yellow gap means is basically, notice this gap right here. I didn't put an eclipse so you guys can still see. And basically this gap, we go down, possible reversal of this breakout gap. We see support here at $237. And then we have a gap filling this gap. And that every time that a gap is filled in the same direction that there was a possible reversal, always means we're going to be going in that same direction of wherever this gap is established. In this case, it's bullish. It's almost 9 times out of 10. I'm always looking for this because breakouts are ways that you can make money swing trading. And so in all of my technical analysis videos, I'm always looking for breakouts like this. So I hope you guys enjoyed the video today. If you found any of this information to be helpful, please leave a like, comment what other topics you want me to go over in the future, and I'll see you in the next video.